Futures suggest a little bit weaker market open this morning, but there's more to the story, and here's what you need to know before the bell. Over the last couple of weeks, we've talked about this rally in the stock market from the recent lows. So let's back up just a little bit here for our data point. Back in early February, when the market was peaking here, we wrote an article talking about the correction had begun and to expect a pullback in the market. That was exactly what happened through the month of February and into early March. Since then, we've had a very strong rally coming off that low, following all the bank crisis issues, the Federal Reserve hiking interest rates, all that news which you would have expected to push markets lower actually led to a rally in markets, expecting the Federal Reserve now to pivot and begin to reduce interest rates, but there's really no indication that that's what the Fed will do. Looking back at the market, we've been building this downtrend line since April, and the market broke above that on Monday with that bit of rally. Now, yesterday, the market pulled back to retest the top of that breakout of that downtrend line. Now, importantly, the market's also been establishing a nice uptrend of higher bottoms ever since that October low. So we now have this nice compression in the market that's occurring here. The market now testing the top of the breakout of that downtrend is a bullish indicator if it holds. So today's weakness when the market opens will be critical. If the markets are unable to hold above this downtrend line breakout today, we're probably going to be looking for a retest of the 50-day moving average. That currently resides right around 4,000 on the S&P. Below that is a whole cluster of support right at 3960, which is where another cluster of moving averages sit. So again, even if the market pulls back here, the bullish trend of the market is still intact here, and lots of levels of support, particularly with the 50-day moving average now well above the 200-day, suggesting that there is a good bit of support here for this bullish trend to continue, at least in the short term. For now, this suggests that any type of pullback to support is a buying opportunity to add exposure to portfolios until that dynamic changes. And again, for that dynamic to change, we're going to have to violate a good bit of support in the markets over the course of the next couple of months. April and May, as I said yesterday, tend to be stronger months of the year. So use pullbacks here as an opportunity to add exposure for now until that changes. But again, that hasn't changed just yet. If the markets are able to hold here and turn up off this support line breakout, then that is also going to be bullish, suggesting this market's got a little bit further to run. And again, as we start to move into April and May, won't be surprising. Again, the big issues here are going to be employment data on Friday. Is that still strong? Will that keep the Fed on track for more interest rate hikes? Or will we start to see enough significant weakness in some of the data that the Fed actually begins to talk about having to cut rates? Again, when they begin cutting rates, that won't be great for stocks, but at least for now, that's what the market thinks. So from a trading perspective, the bullish trend is in place for now. So use this as an opportunity to increase exposure on pullbacks that get the markets back to a little bit oversold. Again, as I stated in last week's newsletter, markets were very overbought, so a bit of a pullback this week would not be surprising. That's what we've seen so far. Holiday shortened week, wouldn't be surprised to see a little bit more weakness before the end of this week. So again, just trade accordingly, keep a watch on the markets, and of course, we'll keep you updated right here before the bell.